Hello, everybody. Welcome to Kudlow and Company. I'm Bob Pisani. So great to be with you, Rebecca.
It is great to be with you, too, Bob. I'm Becky Quick. Larry's off tonight, but as always, Kudlow and Company aims to be right on America, right on business, and right on the money. This show believes that free market capitalism is the best path to prosperity.
And this evening, a great start to the third quarter. We've got more market-friendly data from the June ISM figures, which came in at the highest level since April of last year. The ISM surveys purchasing managers in the manufacturing industries and is a widely watched indicator because it's the first real report on the economy for the month. The trend is clearly back up, and other data in the last few days have reinforced the bull story. That is, moderate economic growth and core inflation under control. Interest rate sensitive stocks like utilities and REITs were strong today, as were economically sensitive stocks like steel and metal. A great start to the quarter. Let's bring in our panel. Joining us now, Don Luskin is the Chief Investment Officer at Trend Macro. Peter Schiff is the President of Euro-Pacific Capital and author of Crash Proof, How to Profit from the Coming Economic Collapse. And Jim Awad, of course, a longtime CNBC watcher, Jim Awad Asset Management. Don Luskin, am I delusional here? Look at the numbers. ISM stronger than anticipated, highest in 14 months. Chicago PMI last week stronger than anticipated. Core PC inflation last week stronger than anticipated, or better than anticipated. Strong growth in Europe, stronger growth in Asia. The bull scenario seems intact. Am I delusional about this?
No, you're not delusional. It's the bears who are delusional. And if you need any better, here's the explanation for why stocks were up so much today, why everything just surged today. Pick up a copy of the New York Times, go to the opinion pages, look at Paul Krugman's column. He's got this end of the world column about how the subprime mess is going to drag the whole economy down. He even quotes Bill Gross saying the same thing. If there was ever a buy signal, we got it. You want to buy them with both hands here, my friend.
Well, if you want to lose money, then go ahead and do that. But you're right, you are delusional. You know, we didn't get off to a good start. Look what happened to the dollar today. 26-year low against the pound, 20-year low against the Australian dollar. The dollar is breaking down. You know, oil prices are reflecting the weakness of the dollar. We're breaking out in the price of oil. I think we're very close to a major collapse in the value of the dollar, and that's going to send commodity prices, consumer prices, and interest rates spiraling. And that's going to compound the problems for the housing market, which are just getting started.
That's Peter Schiff, everybody, those of you who don't know. But, Peter, why hasn't it happened yet? Why hasn't the collapse happened? Why hasn't the skeleton, the subprime skeleton, come fully out of the closet and scared the living daylights out of everybody?
It takes a while. It takes a while for this stuff to filter through. Look at how long these hedge funds were able to pretend that these subprime debt securities that they hold actually have value or close to par when they're really practically worthless, if not completely.
And now
worthless.
that they're not pretending anymore, nothing's happened. The world hasn't ended. So one of these days, we're just going to have to stop predicting that this same old thing is going to cause the end of the world.
I'm not predicting an end of the world. Look, you know, for the last 8 years, the U.S. stock market has underperformed just about every asset class in the world, whether it's foreign stocks, whether it's foreign bank accounts, whether it's commodities. You guys keep coming on the program telling people how great the stock market is.
Well, Jim, let's talk about what happened in the stock market today. We did see triple-digit gains for the Dow on a day when oil closed above $71.
Look, what Peter's talking about, the gradually declining dollar, that actually is in our interest. It's the way that we solve our imbalances.
No,
and by the way, it makes U.S. assets very cheap, both U.S. equities and U.S. real estate. But what's really going on here is you've got a corporate sector. Can I just 1 second, please?
Yes, go ahead, Jim.
You have a corporate sector here that is in terrific shape, so a little bit of revenue growth leads to a lot of profit growth. You're getting upticking real GNP growth, which means that the profit numbers that are about to be announced are going to be better than expected again. So far, Bernanke is right that you've got somewhat better growth with somewhat lower core inflation, and you haven't finished the deal game yet. The money has been raised, but it has not yet been called and deployed. So if you have good earnings and deals, at least for the foreseeable future, you're in good shape, and the declining dollar, if it's orderly, is not a bad thing.
Hey, Peter, you are the one who has the most to prove here. You're looking at the second quarter where the Dow was up more than 8%. Over the last year, you're talking up better than 25%. What makes you think now is the time that things turn bearish?
First of all, I don't have the most to prove because I've been making the most money for myself and clients by avoiding avoiding the U.S. market. So it's the bulls that actually have something to prove.
Any bull out there would say, look at the returns I've gotten over the last year, and you would have to make that argument.
If they compare them to the returns we're getting abroad, they pale in comparison.
Yeah, but Peter, explain to me how if the U.S. market is going to collapse the way that you're talking about, how foreign markets are going to do well. We still are a very important part of the world economy.
We are a burden that the world has to bear. See, the problem is Americans are not producing enough. All we're doing is consuming and borrowing. And what that does is that drives up prices for everybody else, that drives up interest rates around the world. We're unproductive. When the rest of the world lets the dollar collapse and their currencies rise, all of a sudden consumer goods that people around the world can't afford suddenly become affordable, and a lot of capital that was squandered on American consumption is going to be available for
I'm
local
sorry.
investment.
Wait. This just can't go on. I mean, I feel like I'm debating Michael Moore here. America is not a burden on the world. We are not a virus.
Sure we are.
Not a stain.
We are the most productive
We are at peak industrial
world.
production. We are the engine of innovation and production for the entire world. And if you were to take America away...
And without our consumption, the rest of the world couldn't exist.
Look at the way the
Sure they would.
Don, why don't you go ahead?
Look at the healthcare systems of the rest of the world. You've got countries like Canada that take our innovation, our drugs, control their prices. You take America away from there, then what's left of the Canadian healthcare system
it's production
collapses.
that's
so let's not talk
important.
about America being a burden on the world. America is the shining beacon of the world.
Right. Production is in many cases the low end of the totem pole. The high intellectual content is created here. There is only one Microsoft.
No, then why do we have a $60 billion a month trade deficit if we're producing so much stuff?
And that
because we're so rich we can afford it.
No, that's not.
Because our money is so valuable, because our credit is accepted worldwide, that billions of peasants worldwide are willing to work in poorly lit, poorly ventilated factories just to get our paper money, because it's that precious.
No, our paper money is precious. We print it. It costs us nothing. Look, the world is going to wake up to this con.
And you ask them, where do you want to live? Where do you want to invest? It's the United States. Now, on the margin, they may be diversifying somewhat into euros.
Guys, hold on.
Both of you guys need to read my book. You really need to read my book.
Let's talk about earnings.
That's what this is about. I understand. Believe me, it's all about promoting a book. And if you'd written a book on how there was going to be a booming economy, that's what you'd be talking about.
Okay, time out. Bob's got the floor.
Yeah, let's talk about earnings. Let's talk about something a little more productive here. Look, Jim Awad, you're on top of earnings all the time. Yeah. Look at the revenues for the S&P 500 companies. You know this, 50% of the revenues are overseas. Asia's strong. Right. Europe is strong right now. Even if U.S. revenue growth is relatively modest, we're going to get an earnings expansion because of the strength overseas at this point.
Right, Bob, you nailed it. If you looked at the last quarter that was reported, all of the better-than-expected earnings and revenues came because the foreign markets were doing well and U.S. companies were capitalizing on that. I think you're going to see that again this quarter, and meanwhile, the domestic side is picking up. So you are all systems for good economic growth and much better-than-expected profits, and profits are the blood that drives stock prices.
And yet, Don, you got to admit, Peter has some points, and I'm particularly concerned about the inflation situation, the headline inflation situation, the oil and food situation. That is a bit of an Achilles heel for the bull scenario. Unless they get headline inflation under control, the bears are going to have some real points to score in the second half. Aren't you worried about that, Don?
Yeah, I've been saying that on this show for 2 years. Inflation's definitely a problem. That's why the sweet spot in the U.S. equity market is the energy sector and the basic materials sector. So I don't disagree that there aren't ways of drilling down into the microstructure of what's happening here and doing something smarter than just buying the 30 stocks in the Dow Jones Industrial Average. That's not the point. The point is that while we have these long-term structural issues like inflation, we also have an economy that's strongly reaccelerating. We have stocks that are undervalued by historical standpoints. We have a Fed that's still easy. We have interest rates that are still low, and you'd be an idiot to look away from that and not take advantage of it.
Peter, you got the last word here.
Stocks are expensive. The returns have been lousy. The returns are much better abroad. You've got the wind at your back with a falling dollar. You know, the U.S. economy is on the verge of a massive recession. I don't know why anybody would want to invest in companies that are in business selling products to over-leveraged Americans. You know, you're going to see housing prices in many markets cut in half. Americans are going to see their biggest asset turn into their biggest liability. And a lot of corporations that have been earning money in America, I mean, their customers, Americans, aren't going to have any money to spend. They're going to be spending whatever they earn on higher mortgage payments, on higher taxes, on higher interest rates, on higher food prices, on high oil prices. They're not going to have any more money for corporate earnings, and corporations themselves are going to be struggling with their own debt problems.
All right,
yeah, fine, except this is exactly what you and all the other bears have been saying consistently for the last 3 years.
And we've been making a lot more money than
the economic history is strewn with the corpses of people who are too bearish on
As we
America.
hear the music, that's our signal. We got to go. Gentlemen, thank you very much. It always makes for a very lively debate.